Good afternoon. This is Luc with the weekly Enigma trading system review for September the 3rd, 2023. So I'll share my screen and we'll start right away with the presentation. So here we see that the Enigma trading strategy for the S&P is really a complete trading system. It's first of all 100% systematic, it's market agnostic and very transparent. As we know, the system is basically trying to manage what we call ignorance. In other words, we don't know what we don't know about the market. So we want to use signals that are relying on methods that have been well tested and traded for a long time. For that, we try to find imperfections or anomalies in the market, especially in the shorter term, because longer term, we can all agree that the markets are relatively efficient. However, in the short term, we find that on a regular basis, we can detect some inefficiencies, some mispricings or anomalies, as they are being called. For that, we are trading the S&P 500 to implement the anomalies and the inconsistencies that we can find on a regular basis. And for doing that, we use three different types of algos to determine the trade direction and also the trade size. Now, we use multiple time frames, as I've explained on many different occasions, but the trading itself is only taking place during the day session. So although we look at markets outside the regular trading hours, we also examine, for example, pre-market and after-market sessions. We look at daily data, tick-by-tick data, minute data, hourly data, and so on. At the end of the day, I should say, we only trade during the regular trading hours because there is most of the liquidity taking place in that time period. Also, the number of trading signals that we are generating is relatively low, about 2 to 10 maximum per week. We're using three different types of algos, as I've explained before. One is a momentum algo, which is in essence a trend following system, a trend following detection system, I should call it. The second one is a classification algo, which tries to find if the market has more bias to the upside or to the downside. And it's using a certain threshold to confirm this classification. And thirdly, the third type of algo is a hedging algo, which is trying to detect short-term tail risk events. And we will see that these three combined work extremely well together. Now, we can implement Enigma using different time frames, as I mentioned, but moreover, we can also say, well, let's be very selective and only trade once per day at most. And that once per day at most is actually at the end of the day, at the end of the irregular trading hours. So in other words, at the close of the SPX. And for that, we are basically generating the signals during the day, but only implementing them at the end of the day. And so that's the version we will discuss more about later in today's presentation. So we know that Enigma can be traded using every single trading signal that has been generated, and that can take place at any time during the regular trading hours, or we can be more selective and only work with the at the close only signals. Now, on top of that, we can be selective in terms of what type of trade direction are we going to use, the long signals, the short signals, or any signals. So in other words, both long and short signals. Now, for today, as we're going to talk about the end of day version, we can see instantly that the number of trades is about half of what we would be getting or receiving if you would use every single trading signal generated by Enigma. Of course, the results are less attractive, so to speak, but on a risk-adjusted basis, it's still quite interesting. Why? Because we have relatively low drawdowns, a maximum of 15%, and we have a result of about 13% returns net after fees per year on average. And we trade about 100 times per year. In other words, about twice per week on average. Now, if we skip to the recent trade alerts that we've seen, it becomes clear that it's indeed a very selective system. Indeed, since the end of June, beginning of July, we have traded only like 9 or 10 times. So we went from trade 44 end of June to trade 53 on Friday. No, I think on Thursday, 31st of August, it was when we had the last trade signal. And so sometimes we have periods that there is no trading going on, that we're just flat or just sitting on the current position. And the next slide is clearly demonstrating that. So we see that since the end of May, for example, we had a position of long 2 contracts, then it went back to long only 1. It flipped a couple of times between +1 and +2, then went the other way to -2, back to +2, back to -2, and so on. But not that many different trading signals. As you can see, here are the different trades that took place in the last 3 months, June, July, and August. So in total, only 17 trades, so about 5-6 trades per month. So about 1 or sometimes 2 per week on average. Now, of course, the main question is, what kind of results can we get using this simple, very basic end-of-day version of Enigma? Well, actually, you'll be surprised to see that since we started the service in February of this year, on February 15, to be precise, we've had a total of 30 trades only. And with these 30 trades, we have accumulated approximately 645 points in gains, so across the 30 trading signals in total. So that's quite an achievement, I think. And if we express this in dollar terms, using a very modest $20,000 account, we would be up about 16% after these 30 trades. So while the S&P is up about 8.5%, no, I'm sorry, it's actually 6.89, I think here is the exact number. The drawdown we've encountered, it's like 8.4 with a result of 16.14. So on a graphical basis in the chart, we can see that the market here, represented in the brownish color, is up about 6.89, say slightly under 7% since mid-February, while the Enigma end of day is up about twice that amount, actually slightly more, over 15%. And you see that correlation is quite absent. There are times that the market is going up, Enigma is going down, and vice versa, as we've seen recently. So this to say that the market can be traded using a very simple system, provided it's using different types of algo which work together in a nice combination. Now, in terms of implementation, we have been using the E-mini S&P or the micro E-mini S&P. That's really up to the user to determine what's its risk profile and how to implement the signals. But by the same token, we could use options because the market is now being traded only on an irregular basis, as we know, about 2 trades per week. So it can easily be implemented using end-of-day trades with the SPX options markets. And we are launching a program which is doing exactly that, i.e., using the trading signals from Enigma, implement them either in the S&P futures or in the SPX options market, and both with very similar results. And once I have everything up and running using Collective 2, I'll get into more details about it. So that's it for this week. We'll be in touch next week again with the weekly overview for the week to come. All the best and speak to you soon. Bye-bye.